Hi, everyone, and welcome to this week's installment of Mish's Market Minute, StockCharts TV hosting. Once again, thank you so much. I am your host, Mish Schneider, and we've been really covering the earnings season, and it's been really amazing in terms of some great winners and some great losers, some of which I covered. So that's good because I've hopefully prepared you. But this week, I want to really do two things. Number one is I want to talk about, with the market making new all-time highs, what would potentially be the signs of it to crack? And then secondly, I will review a few of the ones that have reported and a couple that are going to be reporting in the following week, because it sort of fits in the scenario of what could happen with the overall macro. So we're going to take a deep dive of the macro first. So how we're going to look at the market is we're going to begin with three key intermarket relationships. We're going to review the indices, the key sectors. Sorry, there's no S at the end. We're going to review some of the commodities. And as I mentioned in the very beginning, some earning plays, ones that are already reported, and a couple of interest for me as they're about to report. So as always, I like to give you a heads up on the symbols that I'm going to be using. You can see that we've got some of these that are about to report the day I'm actually doing the video, a couple next week, and then three that I've selected that have already reported. So let's get to the charts and let's get started. All right, so what I'm doing is I'm arranging my screen so that you can see the leadership here. Just have to change something here. I go to the leadership and I make it what I would like for it to be. In this case, we're going to be looking at the junk bonds versus the long bonds. Now, in a perfect scenario, what you want to see is the junk bonds outperforming the TLTs of the long bonds. And I know I've explained this before, but just to repeat, it's because the ultimate risk on is when bond buyers and investors are buying high yield companies that, I should say, pay high yields, but do not have great balance sheet, because they are anticipating that in an up market, these are going to be the stocks that are going to go up regardless and pay these good high yields. Now we can see that junk bonds themselves, if we were just looking at the chart independently, popped back over the 50-day moving average, and that's good in and of itself. But I'm mostly interested in the relationship, and you can see right now that this is still underperforming the TLTs. Why is that what I'm calling a crack? Because when the TLTs outperform the junk bonds, the TLTs are classically more of a flight to safety. So it's telling you that the bond buyers right now and the bond traders are basically getting more into the long bonds and anticipating that the junk bonds could actually come off. Now, is this the tell-all be-all of the entire market? Absolutely not. But it is interesting to note as a potential early warning sign. Now, let's change this again, because we're going to look now at two other key relationships. One is going to be, well, before we do that, let's actually go to the SPY. So we also want to make sure that the S&P 500, which just made another new all-time high and seems to be in this parabolic phase right here, that it still continues to outperform the long bonds, kind of for a little bit of a similar reason that I just explained with junk bonds, in that you want, obviously, the S&P 500 or the bulk of the stocks that we trade to be doing better than what the long bonds are doing, as again, when traders and investors start to go to bonds and stop buying the SPYs, that's another warning sign. Now you can see that it's come off a little bit in terms of its performance versus the TLTs, but not by very much, certainly nothing that we're concerned about. So we have one potential crack and one still doing pretty good, very good actually, in terms of its performance with the SPY. Now I'm going to change the leadership here back to the SPY. And we're going to look at the third relationship, which is going to be the transportation sector versus the SPY. So my third, it didn't change. Okay, hold on. Sorry about that. Leadership. Okay, so if we go back now and look at IYT versus the SPY, you want the transportation sector
to outperform the SPY because of the fact, especially this time of year, it really is going to be the ultimate reflection on demand. As we know, planes, trains, and automobiles. And we've had some really interesting earnings in this sector so far. And of course, what really kind of skewed this up huge the other day was the amazing rally we saw in Hertz, which of course then was denied by the company that they actually signed a deal with Tesla. And Tesla, of course, itself has just been totally skyrocketing. But more importantly, if we just look at this right here, again, we're still seeing an outperformance in IYT. So right now, no panic, no fear. However, it is coming off a little bit. So again, this is something you want to watch. If IYT cracks, that could be another real big concern for the market. And what's interesting here is what you cannot see. And so we'll look at a weekly chart so that you can see what I'm talking about, is that while SPY, Qs, diamonds go to new all-time highs, this has not quite made it yet. The all-time high here is on this day at 281.35. I actually have it on my chart at 282.40, so there's a little bit of a difference. But nonetheless, the point is that today's high, as I'm talking to you, is 277.93. And now it's come off a little bit. So not only do we want to watch this in its relationship to the SPY, but we also want to watch this in that it could not make all-time highs while the rest of the indices did. So that's really the three relationships that you look at. And when you look at it and put it all together, you have two risk on, one risk off. And is that completely enough for us to make a determination that the market is about to crack? No, because there are other relationships to look at, like how we're doing against the utilities. And right now utilities are down. And so I would say we're still in good shape, but be aware. All right, now if we move from there, let's just take a look at the actual indices themselves. And again, interesting to see how they are performing against the SPY. Now there's been this huge rotation into small caps. And if you recall, I had said to you that once this took out 232, you just sort of buy it and close your eyes. And it certainly got a nice move up. Today's high being 240.94, and now it's come off a little bit. So you want to be concerned a little bit here about a potential reversal pattern using a mean reversion, although we're nowhere near there yet in terms of the real motion here. We've just clearing the 50 now, but nonetheless, you want to make sure that we hold here, and we'd like to see this hold up around 234. But so far, that rotation into small caps is making a lot of traders very happy, especially those who know that this is really the granddaddy. So with all the negative press around, we're still seeing a good rotation into some industrials and manufacturers and companies that have a presence here in the US. Then we have to look at NASDAQ. So NASDAQ also had a big bust out today, also outperforming the SPY. You can see the momentum is doing well. This might be one to watch for kind of mean reversion trade, but right now we're certainly not seeing it again. So I certainly don't want you to think that I'm saying the market's about to crack any day now. It's just always good to be a few steps ahead. And then we have the diamonds. Now the diamonds are really underperforming the SPY. Not that that's a really big deal, it's just something interesting to note. And yet we also managed to go to a new all-time high here. It's just that if you looked at the momentum in the SPY that went straight up, this is actually not necessarily doing anything like that. And that's why you're seeing this underperformance. And part of the reason, by the way, is because of IBM, which is really cracked. And now on the day I'm talking to you is down another 5%. Now let's go to some of the key sectors. So these are all my modern family sectors. So for number one, we have the regional banks. So the regional banks did make a new all-time high. And now we would say that this also is something to be watched. Continues to hold up great. And certainly you want this to stay above 70. So that would be the number that I would be writing down to say if it closes under 70, maybe that would be another reason to get a little more cautious. Whereas the semiconductors, in the face of a chip shortage, in the face of companies like Ford constantly reporting that they're going to have trouble meeting the demand because of the chip shortage, semiconductors went on to rock and roll to a new all-time high and keeps going up. A lot of it, of course, has to do with NVIDIA. But nonetheless, this would be a potential good one to watch for a mean reversion trade. And why am I saying that? Is because right now, Well, we haven't quite gotten up to the Bollinger Band here on the momentum indicator, and we're finally getting through the 50. But if it fails the 50-day moving average, may not be classic mean reversion, but if it fails the 50 and then breaks down under this price, could be another warning. Otherwise, you want to look at that 284 level to be the area of support in semiconductors. Now, moving on from there, we're going to look at retail. Now, this also made XRT a new all-time high, as did consumer discretionary. And XLP, which we'll cover in a couple of minutes, also doing better, not at all-time highs. So this is another one. Could we be looking at this as a mean reversion? No, not necessarily. You can see it's just now starting to outperform the SPY. But if we break down in the price back under 100 and we break down under the 50-day moving average, again, could just be signs of some exhaustion, not end of days, but some exhaustion. All of a sudden, the whole narrative about inflation has taken a back burner, as the Fed said, transitory. But this is exactly what we saw after the last Fed meeting. And then everything reversed again, and people started to realize that there is still a tremendous amount of inflation to worry about, as seen by some key commodities, which we will talk about later. And then if we go to IBB, now Moderna took a big tumble, but this is actually holding up relatively well. It's sitting above the 50-day moving average. So again, IBB is not necessarily something that's going to be a big market mover in terms of the macro, very grossly underperforming here in terms of the SPY. But if it breaks down under the 50, just another thing to keep note, especially if you're long some of those pharma stocks like Bluebird, which is actually doing very well today, Intuitive Surgical, which we actually took a little profit on, but is still doing well. So you want to just keep your eye on some of that stuff. eHealth is something I'm particularly interested in, and that reports soon as well. So this is a good way to look and see how that's going to do. Now, I mentioned consumer staples, because consumer staples is doing also very well. Now, the all-time high is 72.80. Today's high is 72.64. Momentum has improved a little bit, still totally underperforming the SPY. But nonetheless, when I mentioned this to you, or I at least mentioned it on TV, I said if once it got over 71.20, it was worth a shot. And we've got about $1.30 in here. I'd keep my eye to see what happens here on 72.80. But more importantly, if this holds up while some of the consumer discretionary starts to fail, that too would be interesting and probably a sign of more inflationary times to come. Now, if we move over to the oil market, with all of the bad publicity about the fact that the United States is not going to add more oil reserves and has actually done more in terms of legislation to make sure that we do continue to switch closer to alternative energy, and globally that just passed, this is still doing pretty good. Now, what's interesting is US oil is still obviously in a negative phase here because it's above the 50, but it's under the 200. But nonetheless, I think we could probably see, maybe if we got any kind of dip that closer to 51, 52 might be a buy opportunity. And at the same token, if we get through this recent high of 58.69, that could actually also mean that we're going to see more upside. But more importantly, OPEC Plus is saying they're not going to do anything to raise production. And so if the demand as we get closer to the winter starts to pick up, oil could still be a factor. It's just eased off, and that's taken a lot of pressure off of the inflationary narrative that we have. And if we switch over to XLE, which is energy, that looks a little bit different. Look at this. Now, this is a weekly chart. Let me go back to a daily chart here. So on the daily chart, we've got a situation here where we are heading in near resistance, but we're still holding support. It's underperforming the SPY. So where this was a leading sector, it's now lagging. And you can see that we've come off in momentum. So we're giving this a little bit of room. We want to see this thing hold 55. We've been long. We've already taken some profits. 55 would be the number I would note. And at the same token, if this can get through the highs of 59.41, then we're going to see another leg up, and that would also bring its own host of concern. I'm adding XME to the mix here, because XME right here is also very interesting. It's sort of trying desperately to hold here up above that 50-day moving average, having tested it a few times. Look at that, since really here back in the mid-October, we have tested this 50-day moving average multiple times and it continued to hold it. So that makes the decision pretty easy that if it breaks down under 43.50, it's going down. But this represents steel and copper, and these industrial metals are still doing okay, well underperforming here, and also in momentum, not above the 50. But if this gets one good whoosh and can take out these highs of 46, then I think this thing can go much higher. So you have a range between 43.50 and 46. And again, looking at the inflation narrative, if this starts to take off, that would actually indicate that perhaps that we're going to see another leg up in most of the inflationary metals and even the food commodities, which have come off but have been doing very, very well. Which brings me to gold. So gold tested the 200 in the face of a strong dollar. The dollar is up a lot today. In the face of the yields, which are come off a little bit today, but still the fact that we're going to be seeing at some point some kind of a reduction of bond buying by the Fed, this is still doing pretty darn good. Very choppy, not easy to trade, but for information, what you want to see is if this starts to outperform the SPY, that definitely means that we're heading into some inflationary time. And just interesting chart formation, we have a sort of a double bottom here down that happened at around 160. And at the same time, we're getting lower highs starting here, lower high here, lower high here. Well, kind of messed it up right there, but again, a lower high here, lower high here. So that tells you that if this gets through 169.25, that's probably going to be really good. But more importantly is the relationship between gold and silver. And I'm not going to change the chart here, but silver is still outperforming gold. Not as much as it was when I talked to you about it last week, but nonetheless, here we are. Silver looked like it was going to break down and is right back through. If we can get through these levels right here in silver, back over 23, and then of course the 200, then I think we'll see silver fly. And of course, if it breaks down under 2080, then that would not be so great for the silver. And then since we're talking about the metals here, let's go to the miners. They're holding up okay, but nothing really great to write home about, other than the fact that we do have an interesting diversion here on the momentum in that we're taking out the 200 while the 200-day moving average is all the way up here. So that says that right now momentum is still good in the miners, and if the miners hold up and don't break down back under that 50-day moving average of 3150, then it's a good sign that maybe the miners, which tend to lead very often the precious metals, if they go up, then that would be a good, interesting play to keep your eye on as well. All right, so now let's move on to some of the ones that have reported. Now, I happen to be a big fan of ZBRA. I had mentioned it to you before. This was one I featured last week, and I said that after reports, if it takes out the 50, that's kind of a no-brainer. It took out the 50 with a big move, inside day the next day, and now it's taking out that high of that day at 592. So this is one that could actually go much higher. Look at the performance here against the SPY. Momentum hasn't even begun to catch up yet to what's happening here with the moving averages here. But this is one that's a really good, interesting momentum play. And I would say you have a little bit of resistance here right now about this 595. But if we take that out, I see no reason why this can't go up to maybe 625, 650. It's kind of what happened with HubSpot. The thing just kept on going. Match.com also reported, we covered this one last week. And we said that if this actually gets back over the 200 and confirms, and here we are over the 50, this was an interesting buy, maybe against, well, this would be too much of a risk. Maybe now against the low of today, around 150.75 or the 200, we're up around $7 from there. But nonetheless, this is one that still has some work to do in terms of its performance against the SPY, but check out the momentum, which is increasing. So this is a definitely interesting play to look at, whether you're hearing this when this comes out on Friday or next week. I would definitely say that if this can hold now between 150 and 156, that's a good sign. And the other one that I covered, but I wasn't sure it was down when I talked to you, was Cake. This is Cheesecake Factory. And what I like about this is it reported, it still has to get through the 50 here. You can see it hasn't done so on the momentum, but it's not bad. almost at the point where it can start to outperform the SPY. So this is one we have our eyes on very much. And that would probably be at this point makes the most sense to just wait till you get 2 closes over that 50-day moving average. And then you can go in and pick a risk maybe to under today's lower or somewhere around 42.50 if it gets there. But I like this one a lot. And now let's go to some that are going to report after I make this video later today. So one is Airbnb. Now Airbnb, this is a classic momentum trade. I wouldn't have been buying it right into earnings, but it looks to me like this thing wants to go higher. So what you want to use as a parameter here is around this 176. If it gaps up tomorrow, you can use 176 as some kind of a risk. If it gaps down tomorrow, then we would say, let's see what happens here, particularly as we get closer to, let's say, 167 or 165. The next one is Peloton. And I added this because I hadn't thought about this stock in a really long time. It's really not been doing well. You can see momentum down, price down, and of course, well underperforming the SPY. However, this could be a surprise. You just never know. It's always good to be prepared. So what I would do with this is one thing, if it comes in lower and makes some kind of reversal pattern, fine. You're nowhere near having kind of a mean reversion here on your real motion indicator. But I would be playing it more for the surprise to the upside. So if this comes in and does well, I like looking at this area around 95, 96. We don't know what the risk would be at this point, but figure we'd look at somewhere around 90. And if it could take that out and then particularly take out these highs about 100, this could be something that could actually wind up doing well as we're getting to the colder weather and people might start using some more indoor equipment. Now, MP Materials, this is Mountain Pass. This has to do with rare earth minerals. This has already come back a lot, but this is also reporting this afternoon after I've done this video, outperforming here, momentum doing well here. I'd keep an eye on this. If it holds around 35, then it might be an interesting play. And of course, if it can get back through 38, 38.50, I think this is one that could actually really still go to 100. I've been long-term bullish. It's just been a little bit frustrating waiting for that to happen. And now this is Stratasys. This is 3D printing, reports this afternoon. Don't know quite what to do with this sort of bar. This might have been actually that it reported this morning, so I stand corrected if that happened. But what you can do now is you can say, gee, if it holds around 34, 38 and does some level of consolidation, this could be interesting because what reports on Monday in the same space is one of my old-time favorites, which is 3D printing. This one I know hasn't reported yet. And you could see we're outperforming, momentum is gaining. We made a big move here to the 35. We've now come down. I'd love to see a move down to 30 to buy post earnings. But again, if it takes out 35, there's no reason why this can't go back up to 45.50. And the last one that reports on Monday is Roblox. Now, this is video gaming. It also has to do with metaverse. They're doing research into it just the way Facebook is. But this company doesn't have the controversy that Facebook has. So you can see right now that this thing is trading right under that 50-day moving average. So after this reports, if this thing reports really well, gets through 85, I would think that that means it's going higher. If it doesn't report that well and gets anywhere near 70, then I would think that would be another opportunity to buy this. And it's a relatively new instrument, so we don't see any momentum indicator. And of course, you can see it's still underperforming the SPY. So if we sum it all up, there's always opportunities, some things that follow the market directly, some things that will go completely counter the market. The overall market's still extremely healthy here, but again, we have a couple of warning signs to watch for, with particularly the transportation and the relationship of the bonds to the SPY and the relationship of the bonds to the junk bonds.
So now that we have reached these all-time highs, I hope this session was very helpful to you to be able to prepare for what to look for as an early warning, and also some new picks to look at for next week should the market hold up. Hope you have a good one. Thanks so much, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.